following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit
That's awesome.
for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials up 45, NASDAQ down 42, S&P's off 3. Gold contract trading down $15, $11.90 an ounce. We have silver down 25 cents, $14.39 an ounce. Light sweet crude flat, $74.16 a barrel. Notes and bonds, you get the 10-year note flat at 117.22. 30-year bond down 8 ticks, 137.01. King dollar up 130 ticks, trading at 95.435. The euro is at 114.89 to $1 US. The yen is at 113 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's go take a look at them. What do you have? You got a Columbus Day. You got high volatility. You're going to have low volume. We had the SPY go down to 285. Rejected it. You're at 287 right now. Bottom line, we'll see where this shakes out coming into the close. If we go and we take a look at the E-minis, we take a look at these E-minis. You've had quite a ride out here today. We started out, bottom line, up into the price point of the $28.93. All of a sudden, at approximately 11 o'clock this morning, this market just started falling apart. Makes its first low out here at 11:40 at 28.66. You get a small bounce up to, well, you get a 10-point bounce. You go right back down. And now what we've done, we've made it back to the top of the range. So as we come into this close, we'll see whether they're going to bring it down into this 28.86. It looks to me like that's the last time we get any juice here. So 28.86 is going to be game. And if it breaks into the 86 coming in, you know, for the next 20, 30 minutes coming into this close, then you actually do have game down to 28.74 once again. NDX 100. Let's go take a look at the NQs. So the NQs out here, they come down hard. We had the futures. If we take a look at these futures, what you're going to see inside the NQs had a high out here today of 74.53. That also started falling apart approximately 11 o'clock. We went down. The first leg in the Qs, folks, didn't take us to the lows. The first leg of the Qs took us to 73.12. You did a little bounce, and then all of a sudden you get down to this 72.86 area. And it looks to me that at this particular point that you're not going to get any more juice coming into this close out here. And the real kick is going to be, do we get back into this 73.57? And right now, you're at about 23 points above that area. The NDX 100 is coming right into ice. So let's take a look at the strength versus the weakness inside the NDX. The strength out here is Walgreens. That's up 2.6%. Costco's up 2%. You have Kraft Heinz up 2%. Taken away, you get Workday is down 4.8%. Tesla is off 4.5%. You get Intuitive Surgical off 4%, and Vodafone is off 3.5%. Inside the Dow Industrials, the movers and shakers inside the Dow, point-wise, what you have is that you have Boeing, Visa's taking 24 negative points, Microsoft 7, Boeing 7. Putting positive points in it, you got Walgreens out here, 12, Home Depot 10, Travelers 10, and Walmart 10. We go over to the IWM buying the dip. They're still buying the dip, folks. There's no two ways about that. What you have out here in the IWM, they bought the dip on Friday, saved it at the 200. Same setup out here this morning. Comes right down to the 200, too. Almost at a penny, I think. Let's see. So 160.99. Yeah, just got underneath it. It was 160.55 it got down to. Bottom line, they bought the dip. We'll see where this baby shakes out. Silver, we could take a look at the silver market out here. What we had with gold and silver, folks, is that they both caught a bid last week. Bottom line, they're pulling back into that area. And there's volume, but it's still lighter volume than we're pulling back into. We've done the 81,000 contracts. You're pulling back into 117,000. We hit 1423 out here. As long as this closes above 1425, it'll. Bottom line, that's a rejection. You're at 1439 out here. King dollar. It's going to get intriguing here. Is that we do have holiday trading. You know, the bond markets are not liquid out here today. And good old King dollar is trading up 120 ticks. You've done 11,000 contracts. That is going into 24,000. Yeah, you haven't really basically given it up on price yet. Good old King dollar would have to get back inside the 95 level to get in the lower range. We're still in the higher range when we are taking a look at the King dollar. What has happened in spite of the gold getting smoked is that there's no doubt, as one of our targets is saying, you get the GDX and the GDXJ have rejected lower price. You know, you had the GDX get down to 1820. Right now you're trading at 1861. It was down there testing the last swing low. It rejected it, and it looks like that's going to be close whether we're going to have lighter volume because we're at 33 million right now. It's going into 42. But what we will see as we're coming into the close, the GDX as well as the IWM will get some volume. And when we start talking about the NDX stocks and the NASDAQ, the tech stocks in general, folks, man, when they get out of them, they get out of them quickly. And it's going to be intriguing to see how this shakes out in the next few weeks. Square, which has been a huge winner. Bottom line is that you talk about them everyone getting out once. Square went from 92 to 83 in about a heartbeat out here today. Right now, you're down $7.60. You've done 27 million shares traded. Bottom line is that, you know, the tech stocks, they basically, when they go south, man, that elevator goes fast, furious, without stops. Our phone number is 877-927-6648. You have the Dow Industrials up 48, NASDAQ down 40, S&P's down 2.5. Stay right there, folks. We got our man, Mr. Steve Rhodes, coming back. We're going to be growling and prowling, talking markets.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow right now trading up 50, Nasdaq down 35, S&P's off 2. Let's go over to my man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, the way that you can get this newsletter, as well as get the workshop that he's going to be doing tomorrow night, is come over to our website at TFNN. You're going to see right under featured content, our man, Mr. Steve Rhodes, Mastering Probability. You're going to hit subscribe. You can get Steve's newsletter a month, 6 months, a year. They all come with a money-back guarantee. But on top of that, folks, bottom line, you're going to be a subscriber, and you're going to be coming to a great workshop that Steve's going to be doing tomorrow night at 5 p.m. And now, if you can't make it live, don't forget, we have some great technology. It'll be on your page for an additional 30 days. Steve Rhodes, what's going on?
Well, and they can watch it on their cell phones.
There's no doubt. The cell phone is the computer now, man. It's a huge
the cell phones,
deal.
The iPads.
Yeah.
Absolutely.
You gotta love it.
So it's great. I'm just working on the finishing touches of tomorrow's workshop, and really one of my favorite workshops, because it's a pattern that we talk about, many of us utilize here, the A to B equals CD pattern. So I'm going to teach folks how to master that. And again, it's tomorrow evening, 5 o'clock. And I don't know if you mentioned this or not, but I just want to make sure that everybody out there that's listening in knows that whether you've been a subscriber to Mastering Probability or not in the past, because of the new website that we have installed, everything just starts from scratch. So you can test drive the newsletter. It comes with that 30-day risk-free trial offer. So even if you have been a Mastering Probability subscriber and you want to refresh yourself, not just on the how to master the A to B equals CD pattern, but I've got 4 other workshops, 3 that are, well, all 4, quite frankly, are extraordinarily important. One is the pattern that has been present before every bear market in the Dow for the last 130 years. It works on any type of time frame for all instruments, so it's a pattern that I love to be able to teach subscribers how to use. I teach folks how to utilize my black box signal system, which helps people. In what I've done here, Tom, I've really expanded the newsletter so that I'm able to provide subscribers that have their long-term portfolios as well as their trading portfolios for how to best manage that.
Yes.
So it's really encompassed. The newsletter has gone to become more than just a trading newsletter. So it's got many, many uses. So if folks out there are just long-term investors, then this is an excellent time to come on over and test drive the newsletter and take a look at those new tools. I love teaching folks about the what I like to call Stevie's red line. It's the oscillator and change line. It's an extraordinary tool for helping you to understand when a market is just pulling back into support or trading up into resistance. So it's an excellent tool. And then, of course, the money management workshop, and that itself, money management is really the whole key to being able to stay in this game and not getting too leveraged. But there are a few A to B equals CD patterns out here that I'll share with folks. The 2009 bottom for the New York Stock Exchange, and this is a monthly time frame chart out here. We can see how this formed a 2.618 A to B equals CD. It formed that required bullish reversal signal. We'll talk about that during tomorrow evening's workshop as well. And it's just an extraordinary pattern. If we take a look at the big picture, so that was taking a look at the 2009 bottom.
Yes.
And I want folks to understand at least my take and what it is that I see for the U.S. stock markets over the long haul. And here in the big picture, there's on a quarterly basis. So we're taking a look now at quarterly charts out here. What we can see is the formation of A to B equals CD patterns to the upside for all of the indices. So the Dow has reached its 1-to-1 level. And you know that oftentimes when you do that, you take a rest. That's what my interpretation of what the markets are doing right now. The next target for the Dow is going to be 30,483. The S&P 500 has not hit its 1-to-1 target on a quarterly basis. That's up in the 3278 level. In the case of the NDX 100, it hit that 1-to-1 level, which was in the 7609 area. It's just pulling back a bit and is getting ready to set up another bottom. It's going to target, or should target, 8621. The Russell 2000, even though been beaten up out here, it still has a unfinished A to B equals CD to the upside in the 1896 2155 level. So I want folks to understand from a long-term standpoint what it is that I see inside the marketplace. If we fast forward to today, right now, and we've seen a bit of a comeback here in the markets. If we take a look at the Dow transports, they're actually in the process of forming an A to B equals CD pattern to the downside. Now, today, earlier in the day, it got down to the 1.272 level. So, folks, if you're watching us on Tiger TV, this is a tool that I developed that I can use on my charts out here. And what I want you to know is oftentimes when Tom or I or Larry or David are taking a look at the A to B equals CD patterns, what I want folks to know is that only 60% of the time is an A to B equals CD going to complete at that 1-to-1 level. And that's what I'm going to teach folks how to do, Tom, is how to master that pattern so they can understand when there's going to be an expansion and exactly what to look for. And what we hit this morning inside of the transports was the 1.272 expansion level. I'm not saying go buy the transports right now. They haven't given us that confirming signal. But we'll touch on that tomorrow in the workshop. Now, the cool thing about the A to B equals CD pattern is that it can, and oftentimes does, create either a Gartley, H.M. Gartley, who produced a book back in 1935 that sold for the equivalent of what would be 3 Ford F-150s today. Hard to believe. $1,500 back then.
Right, right.
You know, and but in any event, so if we take now a look at the Dow transports, we can see that they are in the process of forming what could be a huge Gartley buy pattern. Oftentimes, a Gartley pattern, it has 5 different outcomes, but the 5th outcome is that it turns into an A to B equals CD to the upside. Again, hasn't completed just yet. It's in the process of forming. This is what that pattern would look like out there. And I want to teach folks how to be able to identify the pattern, how to be able to trade that pattern, and understand what the outcome is. The New York Stock Exchange is also in the process of trying to complete an A to B equals CD pattern. And this, too, would turn into a Gartley. And what I'm watching for in the New York Stock Exchanges, in combination with the A to B equals CD pattern, Tom, is I've noticed that the advanced decline oscillator reading, and that's the difference between 2 exponential moving averages, 39 and 19, and that's the center portion of my chart out here, has gotten down, and on Friday got down below the minus 150 level. And the arrows on this chart out here, the up arrows, green arrows, show when that level, this is the lowest level we've seen since the February time frame out here.
Yes.
And the other times that we see, when we get down into that minus 150 level, we've seen bottoms form inside the New York Stock Exchange. So that, combined with the A to B equals CD to the downside, and quite frankly, combined with what the largest U.S. stocks listed in the New York Stock Exchange, the 100 largest stocks, they have barely pulled back, haven't taken out a swing point, and they, in fact, may be forming an A to B equals CD to the upside, taking price into the 11,106 area. So I want folks to celebrate with us, take advantage of the new website, the mere fact that if you've been a subscriber to Mastering Probability, you can subscribe again, get a risk-free trial for the next 30 days, and get tomorrow's workshop, How to Master the A to B equals CD Pattern, the 5 reasons that traders fail to spot the bear market, my black box system, the oscillator and change line, and the money management system. It's a ton.
It's going to be awesome, man. Big time. And the way to do this, folks, come over to our website at TFNN. You're going to featured content. You'll see Mastering Probability right there. You subscribe. You get a great newsletter and be in that workshop tomorrow night. Steve, have a great one, safe one. Look forward to the program and the workshop tomorrow.
Thanks so much, Tom.
Thank you. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 45, NASDAQ down 50, S&P's up down 4. If we go take a look at the price of insurance out here, folks, it was getting a little dicey the last couple of days. We take a look at this VIX. You're going to see the VIX took off from the bottom last Thursday, Wednesday. Wednesday, it's trading at $11.34. Bottom line, you're at 1589 right now. You actually hit 1838 intraday when the S&Ps as well as the Dow Industrials took off downtown. So what's going to be intriguing here is that if we actually do look at this VIX, how does baby set up? You know, you lost a big swing high up there at 1961. We didn't hit that. We did blow away the swing high from August 15th. That was kind of a one-day wonder. We'll see whether this is a 1 or 2-day wonder. What I do expect you're going to see out here now, if we go into the NDX 100, what you're looking at, the 3 Qs, 3 Qs out here today, you're doing 56 million shares. This will put some volume in at the close. Now, the Qs are not in the lower range yet. The Qs would have to get back inside 177.89. We did hit 176.93 today. What's going to get intriguing here is that the way that this selling, let me look at this for a second, came so fast and furious today on basically Columbus Day is telling me that these funds, they're seeing this pullback and they're being careful, and when they're getting out, it's fast and furious. We're going to have light volume. That's the bottom line. The real question is going to be, do you get follow through tomorrow? Because what you have here is this. This is pretty wild. I was doing this just earlier before I got on. There's approximately 69 trading days left in the year. That's it. It's hard to comprehend, but bottom line, there's normally 21 to 22 trading days per month. The average is 21. Bottom line, you gotta picture something. If we go take a look at any of the indices, they're all up good since the beginning of the year. Money managers get paid on their performance. Bottom line, if they think that with these interest rates that, you know, basically have popped, if they think that the market first off has to get used to new interest rate structures, you just might see more volume and more selling coming in this market fast and furious, because you get a picture of something. With only 69 trading days left, picture if you're the hedge fund or your money manager. Put yourself in that position. When you put yourself in that position, you're already up for the year. You could basically go delta neutral as close as you can to. Some of these funds have to stay long. Hedge funds don't have to stay long. Bottom line, I think that's on the table out here right now, because that's not a long period of time in order to basically get delta neutral, stay delta neutral. And if you're already winning, the real kicker is going to be, yes, if a good market goes up another 5%, you don't get that. Guess what? The market is down 5%, you're going to be one of the winners for the year. And that is always on the table. I suspect it looks like to me it's on the table more so right now, because when we take a look at some of these, well, what you also have is this, is that the big winners out here, a lot of the same funds are in the same winners. That's just how it goes on a continual basis. And, you know, we'll see. You know, you get Amazon, monster winner out here. In fact, let's look at this, just so you can get a gist of the type of move. So look at this type of move. You're talking about, let's see, right there. Yeah. So we're talking about 1160 to 1860. That's if you get out today. You're in this all year. Guess what? You know, you don't want to end the year if we're at 1575. You know, I think that's on the table. You know, what you do have inside Facebook, whoever has Facebook, bottom line is that, let's see where that is. Yeah, Facebook, different animal. Facebook's going to come in for a loss for the year. This is interesting. Look at this. Pull this back, put this on a daily for a year. Yeah, Facebook's going to come back. Facebook started the year out at it's pretty wild, actually, 169. So that's going to be a loss for the year. There's going to be very few of those, though, inside the tech business. Let me just go look at Google for a second. Yeah, Google's way up, too. So Google, you're talking... Yeah, Google's only up 10% for the year. So, oh, Apple. Let's go see what Apple was. Apple's got to be up big. So Apple... Yeah, Apple was... Apple's gone from, yeah, 174. So Apple's up almost 30%. You know, they're not going to leave those, I suspect, on the table. And that's going to be a danger point coming into the next few days. We'll see tomorrow. We'll get a good gauge as to, is the follow through here, is the velocity here on this downdraft. What we certainly did last week is that if we do go over to the IWM, what you're going to see is that the IWM broke the swing, broke it with volume. The swing that we're talking about was 162.26. You had 26 million shares, blew that away with 31 million. That sets up the next level down, which is the highs of the lows of the infamous February 9th, which we haven't tested yet. You know, many of the equities have tested, but the highs of that low is 153. And last week, we traded from 169 to 160. So the bottom line is that, yeah, you can go down 10 points in a heartbeat inside the IWM. We go take a look at the, let's take a look at the biotechs out here, the IBB. Excuse me, folks. Biotechs are trading 115.55. Okay, so they came up to, interesting. So they came up to ICE and gave it up. You know, their all-time high is in 2015, 133. Comes off that with monster volume. Tried to get up above that for the past 3 months. Just got back inside one of the ranges. A lower range has to be 114 though. Right now you're at 115.62. But it looks to me like that is still a counter trend bounce, because you can see that you died in the vine month by month. We did in July you did 54 million trying to break to a high. In August you did 41. In September you did 30. That's a big. You can look at that, man. That's intense. That means we're going downtown inside those biotechs. Microsoft. We take a look at Microsoft. Microsoft has had a good year out here. Microsoft is trading at 111 right now, and Microsoft started out the year. Look at this. This is pretty wild. Yeah, Microsoft started out the year at 85. So you get to 15.25. Yeah, it's a big number. Microsoft itself, that's almost up 28%. So you can see when you start adding some of these numbers together, the real question is going to be, do they stay? Do they go? Do they go delta neutral? And as I just brought up that VIX, you can see the insurance, and that's how you can think of VIX in general, folks. The higher the number, the more expensive the insurance cost in order to basically cover portfolios. Dow Industrials right now trading up 55. You get the NASDAQ down 44. S&Ps are off 3. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go take a look at Google. So all these internet stocks, folks, not all of them, but it seems like the social media ones, they're having a tough time basically protecting data. So you got Google said it found a software glitch in Google Plus social network in March that could have exposed the personal data as many as 500,000 users, but decided not to tell the public until this morning. Pretty wild. So let's see what they have to say. Google chose not to disclose the flaw out of concern it would trigger regulatory backlash, especially in the wake of criticism against Facebook for privacy failures, according to the Wall Street Journal, which initially reported the news this morning. In a statement posted to its blog minutes after the report, Google said it plans to shut down Google Plus for consumers and introduce a new privacy tools restricting how developers can use information on products ranging from email to file storage. The internet giant found the flaw in March during an extensive privacy and security review. Ben Smith, Google Vice President of Engineering, said in a statement, an internal committee decided not to disclose the potential breach of Google Plus because there wasn't sufficient evidence of any misuse of the exposed data, which included names, email addresses, ages, occupations. The bug was immediately fixed at the time. The news adds to Google's woes, of course, and further erodes the narrative that Facebook is the worst offender of the major technology companies on data privacy. Facebook has received months of criticism for allowing developers to spirit away use of information and pass it on to political firms that worked in the 2016 campaign. In the last 2 months, politicians on both sides of the aisle have stepped up their attacks on Google, with Republicans accusing it of harboring biases against them, and Democrats question whether the company has gotten too big and powerful. Bottom line is that the whole deal with security, with privacy, all this, I would say that you better start off with the basis that you don't have any folks if you're on those networks, because this is a non-stop deal on a continual basis. And if we did take a look at Google, now check this out. Google's an ABC down. 1 second. 1.8 million, 1152. Well, we'll see what we do out here today. It doesn't look like to me, well, I don't think we're going to do 300,000 in 15 minutes. But if we do, you get an ABC structure on the way down. The A point on this is 1253. Your B, it's a $100 A to B, which would get you 1109. We hit 1127. Yeah, so it already hit 1127. This wants to go to 1109 anyway. But this will be intriguing to see where this comes in, if in fact you do push a few more thousand shares coming into the closeout here. We go take a look at the Intel. Let's see how. So Intel, bottom line, this has been near the bottom of its range. The top of the range out is 57. You're at 47. Still banging around these lows. And if we do take Intel and we pull it back, what you're going to see, you know, Intel's trading where we were trading in November of 2017. So this baby's already come off its high. You have volume at these lows. Looks to me like you're going to basically trade somewhere around $42. And yeah, that's interesting. So that $42 mark too, folks, that is the February 9th number that hasn't got tested. We got down to 44. We got that. We did that in September, the week of September 14th. But we haven't got, this is going to make its way down to that $42 level. That's the way this seems to be shaking out. And what I do expect you're going to see, many of the equities already made it there. The indices are going to make it there. And we'll see how we get there. The yen, let's go over and take a look at the yen. So the yen's going to be important if you happen to be in the metals market, folks. And this yen, we start pulling back, and JPY. And we came back hard today, you know. So bottom line is that we're at 113.11, and what happens at 113.11, it gets us inside the lower range. So now you do have game on the table that you can get back down to 109. It's a big move out here today. You know, the Asian markets last night took a monster hit. Now, China had been closed for a week. When China opened back up, Shanghai was down 3.7%. The CSI was down 4.3%. So the CSI, let me see exactly what the CSI says. The CSI is a free float weighted index that consists of 300 A share stocks listed on the Shanghai or Shenzhen. Okay, so these are all the biggest stocks, and this baby really took it to the wall. 4.3%. You're at basically the lower end of this range. We've come down from 4,400. You're at 32. We take a look and put this on a 10-year. Yeah. Well, you get gamed out at 28 right now, and you're at 32. If we take a look at HKG, the Hang Seng was down 1.3, and Hong Kong, we're at 26,202. Oh, interesting. Let me see this. I think it's broke out a bottom. And you have volume. 26,219. Yeah, this is in trouble. So check this out. This broke a swing low last night with volume. Stayed down there. Oh, yeah. So 25,300 is game. And this is off a high of 33,000. So you're already down 7,000 points. That high was generated February this year. Interesting. So yeah, this has been coming down since February. This is a very large problem here. Let me put this on a monthly and bring it back further. Oh yeah, I see what happened. This came out, tested the 07 high, rejected it, go back inside the lower range. This is game now. This is game for a lot lower price. This is a monster consolidation though, but what a wide consolidation, man. Pretty amazing actually. Let's go take a look at the oil market. So the oil market has been resilient up at these $75 levels. That being said, you know, you came down to 73.07 today. You did reject it. Looks like you're going to have lighter volume. So the oil market would have to get back inside 71 to get in this lower range. So you're still talking energy prices that are elevated. We have unleaded gasoline trading at 205. You have heating oil trading at 239. Those are wholesale prices. And what we do have, unfortunately, is inside the Gulf of Mexico. We're going to be coming up with Michael roaring into the Panhandle. More than likely, it's going to start tomorrow. It's going to be close to us tomorrow, offshore. It's going to be coming up to them approximately Wednesday. Dow Industrials right now are trading up 70. NASDAQ is down 45. S&Ps are off 2.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now up 67, NASDAQ down 43, S&P's up 2, and if we go over to that GDX, folks, bottom line, even with gold down, and here's some divergence. Bottom line, that just went from 1820 to 1868, went to the positive. Bottom line is that this still wants to make it to the top of its range, and the top of that range is approximately 1948. The downdraft from the August 15th is your benchmark. The low of that August 15th is 1847. You're back in the range again, so that's going to make it a shot that it can get back up to the top of the range. If we do go over and we take a look at King Dollar, what you're going to see is that King Dollar did not hold price today. Tried to get to a high, didn't have the volume, gave it up on price. That's saying there's a shot that King Dollar is going to try to back down. And if we go to the yen, which we just did, you're going to see the yen basically had a tough day out here today. That was a fast move downtown. And that is something that you'd be looking for if, in fact, we're going to have the metals market go topside. What we just did since our opened out here today is that we went from 113.87 to 113.11, and that did get it back inside the lower range. So the yen last week got all the way up to the price point of 114.54. So I expect what you're going to see out here in Asia tonight, you're going to have some high volatility once again. And if we do go to the Nikkei, so watch that we go to the Nikkei. When the yen gets stronger, the Nikkei came off that high pretty much. 24,440, we're at 23,000. So you can see it's that the correlation is so tight between the weak or strong yen and a weak or strong Nikkei. When the yen had just got much weaker, went from the 109 to 114, we went up 2,000 points inside the Nikkei in the matter of 2 weeks. It's that dramatic. Now it's turned the other way. So guess what? Nikkei wants to go south. Dow Industrials up 51, NASDAQ down 47, S&P's up 3.5. Stay right there, folks. When we come back with some numbers after the close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Get our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You have the power to create. Your power is so strong that whatever you believe comes true. You are that way because that is what you believe about yourself. Your whole reality, everything you believe is your creation. That's about, we have it all inside us, folks. Go for it. Market-wise, let's take a look at it out here. We have the Dow Industrials up 39, NASDAQ down 52, S&P's off 1.5. Bottom line, folks, it's pretty wild when you look at these numbers coming into the close. You know, NASDAQ, yeah, is down basically 52, but we had some high volatility out here for a basically a holiday, Columbus Day. NASDAQ was down 0.6%. Dow and S&P's basically flat. When you take a look at them intraday, however, what you're going to see is that you had nice volatility out here. We got to a low in the Dow of 26,223. It rejected lower price, came off that level and went up at 250 points. So big number. So the bottom line, Dow, no doubt, saved itself. NDX 100, different ball game. If we take a look at the NDX, bottom line, you went downtown. You actually had some volume come in the marketplace even on a holiday. We did 65 million shares in the Qs. That's a big number. The NDX 100 traded down to 72.67. You finished out at 73.52. So bottom line, you came back almost 90 points, which is big. That being said, bottom line, you get a doji right in the middle. That's telling me that next leg down is in place, and we are inside, bottom line, a lower range. The lower range would set up that you can get down to 71.58. If we take a look at the 3 Qs, what you're going to see, you'll see the expansion in volume once again. Bottom line, you got, we did 65 million today. Last Thursday, you did 80 million. Friday, we did 83 million. Bottom line is that you are barreling into the swing point, which had 60 million with volume. That's saying 174 is game. The small caps, bottom line, small caps saved themselves right at the 200-day moving average, as it did on Friday. Also, 21 million shares. What the small caps did do last Friday, folks, is that we broke its June swing point. You had the volume on the break. That sets up lower prices. And if we take a look at the IWM right now, it looks to me like when I say lower prices, we're going to be going after 153. Right now, you're at 161. Gold contract, they slammed gold out here today. That being said, bottom line is that what we did do is that you went lower. We were going into the strength from last week on the October 2nd. We went from a price point of 1192.20 and we went up to 1212. Now, it's really wild here, man. We are at 1192.10. So you're 10 pennies under that swing. We did volume out here of 305,000 contracts versus 365. So bottom line, we'll see whether gold can get some traction tomorrow. 10 cents is 10 cents. Bottom line, you're under it right now. That does set up that you can get another retest of 1189. We'll see where this number shakes out in the next few minutes. Silver, what silver did, silver also had a nice sign of strength last week. That pulled back with lighter volume into the strength that it had. Now, the bottom of that strength was $14.25. We came to $14.28. What silver did do is reject lower price, had lighter volume, so that's saying silver does want higher price. If we go to the GDX, you'll see that we had divergence out here, even with the metals going lower, staying lower. The GDX went lower, rejected lower price, had lighter volume, and then get some juice behind it. We went from $18.20, closed out at $18.71. Anything inside $18.47 is game to go after the higher swing points again. So pretty wild how that baby is checking out. Note and bond market closed out here today for the holiday. You have good old King Dollar. So King Dollar got up to a high today of 95,705, couldn't handle the high, had half the amount of volume, 12,000 versus 24,000, gave it up on price. That's saying King Dollar is going to have a shot to get back inside the lower range. Now, that lower range, folks, starts approximately a half a penny lower. Right now, a little, actually 3/4 of a penny. So that'd be like 750 ticks. 1,000 ticks is going to be a penny when we talk inside the dollar. But what we did do out here is that we got to higher price and rejected it and had lighter volume. Tesla, bottom line last week, took $12 billion off its market cap. Tesla's breaking out its lows, folks. This is going to be big problems for Tesla. Bottom line, it's been building cars to get down into this high volume low. The high volume low we're talking about in Tesla is 244.59. That thing has been sticking out like a sore thumb. The way we're barreling into that, bottom line, looks like to me we're going to probably take it apart. We did 13 million shares out here today. That's barreling in with about the same type of velocity that it had on the weekly at that low. And with today being a holiday, I expect what we're going to see is that we're going to see an expansion of volume when we get a normal trading day tomorrow. And let me just pull this back a bit, see if I can get this up so you can see how it's barreling. Yeah, we can. Okay, so now we can see how it's barreling into it. So at the low there, we did 16 million shares. You're at 13 right now. Bottom line is that you'll get a lot more volume going tomorrow in this market. And Tesla, bottom line, that last week and a half, that just took, I believe, $12 billion off its market cap. It's a big number, man. And it doesn't look to me like Tesla's going to stop on the way down. You know, if we actually take a look at Tesla, from highs to lows, the way this is set up right now is that if, in fact, we get it down to this 244, then what you have is that you're in a whole different trading range. And the bottom of that range there ends up being 185. We've been in the higher range in Tesla now since February of 2017. So we've been up there for 2 years. You're barreling back inside the lower range. You have wide price spread. You have volume behind the move. That's saying that Tesla's going to have some big, big problems. Dow Industrials closed up 39. NASDAQ down 52. S&P's flat. We'll come right back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. You know, Google out here today, folks, got hit, and I had read on the last hour, you know, what was going on with Google. Bottom line is that they had found a software glitch in March. Bottom line, didn't tell anyone about it till this morning. And as you read through their statement, bottom line, you know, it doesn't say actually how long it was out there, all of the above. They do plan on shutting down all of Google+, the social network. It's going to take them 8 to 10 months to shut it down. They're going to keep up the business one. But that being said, listen to this. This is really wild. So this is how this thing shook out. Now, you're not getting this off Google. You're not getting this off their statement, that's for sure. Oh, let's do this. Okay, so Google's also basically more like an ABC down. We needed 1.88 million shares. We got 1.85. Okay, I'm going to go through the fundamentals first. So this is what actually happened, is that Google, okay, so Google Plus, this is pretty wild, man. They say they found it in March. Well, this has been going on for 2.5 years. Okay, let's see how this goes. Shares of Google, okay. The data glitch is like Facebook's, it was like Facebook's Cambridge Analytica scandal, except it isn't. Google consumers, let's see. First, there we go. The Google discovery concerned the company's Google Plus service, which they tried to create a Facebook. They failed. According to the journal, Google discovered that for 2 to 3 years, ending March of this year, when they basically figured it out, outside companies could hook into their apps into Google Plus and were capable of downloading information that friends of Google Plus users intended to keep private, including birth dates, profile photos, all of the above. Bottom line, yes, it was similar to the same deal that you could do on Facebook, not just with Cambridge Analytica, but anyone that, the developer that was on there. The difference being is that Google, no doubt, was much smaller. Google saying it was 500,000 accounts that were affected. And so the bottom line, folks, this wasn't, it doesn't look to me like the company couldn't determine whether any Google Plus information had actually been accessed through this software bug. So the bottom line is that they don't know whether people have your information or don't have your information. I believe that, like, it's not even close. Bottom line is that these companies, man, the FTC, someone's got to get all over them, because the privacy issue is off the boards. But particularly, you know, everyone keeps using them. You keep throwing all your information out there. Bottom line, it's only a matter of time before I think we're going to have a major problem. And that problem, folks, we don't even want to think about it, because what we haven't seen, thank God, let's pitch this that we actually don't know about, is major hacks inside the whole ATM systems. You know, we know that we had some problems inside the ATM systems. The banks kept that down to a certain point, because that's the last thing they want us to think about. The last thing I really like to think about is that, yeah, you get digitally hacked in about 2 seconds. But bottom line is that there's so many of them out here right now that I suspect it's game. It's definitely game. Let's take a look at some of the higher volume equities out here. Well, actually, let's look at the volume first. So if we take a look at the volume in the NYSE, you did 825 million. That's still big volume. You know, for a holiday, it's real big volume. NASDAQ Composite, 2.2 billion. Some of the higher volume equities out here inside the marketplace, you had GE up 43 cents. That caught a bid. Square got absolutely smoked, man. This is an equity that no doubt has been going through the moon in the sell-off out here today inside the tech stocks. When, you know, intraday, folks, when the markets were at lows, these tech stocks, they were just throwing them out hand and fist. In Square's case, we have volume off the high now, 30 million shares on the way down, and this has been a spectacular run. There's no doubt about that. You know, you pull Square back, and we pull it back to, let's see, just January of this year. You're talking about a run from, yeah, $34 to 90 or to 100. Yeah, it hit 101. So huge, huge run. No two ways about that. What you are going to have now, though, is you're going to have volume off the high, which can present a problem because when you get, if we get follow, we need follow through tomorrow. But if you get follow through tomorrow, then you'd have volume off a high. Then that presents a larger pullback than normal. Microsoft was down $1.28. We had Snap off 29 cents. Look at poor Snap. SNAP. This thing is down in the $7 range now. SNAP. $7.48. This is problems in paradise. I think that's a all-time low. Yeah, it is. 726, all-time low out here today. And you know, when you look at an equity like this, what happens, folks? You have nothing on the right side of the chart to gauge yet. Next time they come out with numbers is going to be on November 8th. So there's no doubt that good old Snap is having problems. You're getting Facebook. Facebook has zero traction. What's so intriguing about Facebook right now, that just might be toast in the sense that it can't get its momentum going again. If we finished out right here, what you'd have is that Facebook would actually be in a loss for the year. Because we pull this back and as to where Facebook started at the beginning of the year, we started at about 177. And right now you're at, let me get the exact date actually. First is, yeah, 177.55. And right now you're at 157. So you're talking about big numbers. Inside the commodity complex, what we had out here today, you had natural gas. Oh, look at that, caught a bid. Now, that's going to be all about, we have Michael, a hurricane coming up the Gulf of Mexico. Yeah, and that would make sense because we get a lot of gas, and that gas is located right where the storm is going to be coming into. You know, you got Panama City, you got deeper in the Panhandle. Gas took off topside, took out the highs, and had volume taking out the highs. But it's going to get interesting because it could be an ABC up. You get 274. Wow, you get 50 cents, which would get you into 360. NG1. Let me see. NG1. We put a continuous contract on here. We said 360, right? Let's see where we're at. So, yeah, that's 390. Yeah, 360 is definitely game. 360 actually is the next swing point from February of this year. 360 is game inside this natural gas market right now. Oil, that was down. That was, let's say it's flat, $74.22. You had heating oil, $2.39 wholesale, gasoline, $2.08 wholesale. Stay right there, folks, and we come right back. Dow Industrials traded up 39, NASDAQ down 52, S&P's flat. Come right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at the XLE inside the oil and gas market. Bottom line out here, that traded down to 76.29, did reject price, laid out at 77.10. The XLF, we go into the financials, we take a look at those financials. XLF out here, bottom line traded sideways. JP Morgan. So what we're going to have starting, I think, this Friday. Yeah, this Friday. JP Morgan is going to be coming out with their numbers for the last quarter at 6:45 in the morning. JP Morgan out here did reject $113.35. You're at 115, and still, it's a high-end consolidation. This is going to be pretty cool watching out how this shakes out. The differential in JP Morgan goes like this in from a couple of the other financials. The last 3 weeks, you were pushing with volume into these highs. You know, if you take a look at this, 3 weeks ago, you did $73 million. You got to $119. 2 weeks ago, $64 million, got to $118.46. Last week, $71 million, got to $116. Interesting. So what you have here is this. You're pushing with volume, but yet those 3 weeks, we did have lower highs, each and every one of them. Still pushing with, so this is going to be a big week, folks. It's particularly going to be a big week because that's come out with the numbers. But we'll see where that shakes out. If we have any type of rejection of even the last couple of days of price, that's going to set up that good old JP Morgan is not going to come in with the numbers that the market is expecting. Bank of America, we take a look at BAC. BAC out here, This is trading $30.27. Also high level consolidation. Now they're coming out with their numbers on the 15th of October. We pull this back, and this doesn't look to me like it's going to basically go for the last high, which is 33. We're at 30. This is backing into its strength at 27. 27.63 to be exact. That's how that looks like it wants to shake out. Berkshire, let's go to Berkshire Hathaway. So Berkshire is still the largest weighting structure inside the XLF, and I believe Berkshire's at all-time highs out here. It's pretty close. Let's see what your all-time high is in the B shares. The all-time high is 223. Oh, right in the dot. That was September 20th. Okay. We hit 222.76 today. Now, this has volume behind it. Oh, I see what's going on, though. Oh, man, this is going into heavy volume. This will be interesting to see what happens with Berkshire Hathaway, and this is why. So picture, folks, what you have. You have Hurricane Michael's coming into the Gulf of Mexico. Bottom line, hopefully, you know, this thing will basically calm down and not be a full-blown hurricane when it gets in there. But what does happen with insurance companies in general is that, yeah, we haven't got hit down here. And so the insurance companies that insure down here really haven't got it. North Carolina, yeah, monster. Terrible. Bottom line, though, what does happen, if in fact we do get that in the Gulf, then guess what? The insurance companies, it's much easier for them to raise rates ASAP, and that's exactly what they do. Big time. XAU, the HUI. And folks, if you like to test drive the gold report, really easy to do. Come over to our website at TFNN. You're going to see under featured content, the gold report. You can test drive that. It comes with a 30-day money-back guarantee. Check it out. You can get it for a month, 6 months, a year. The XAU out here today, rejected lower price. I suspect we're going to have lighter volume. I don't get the volumes in the XAU nor the HUI until about 8:30 tonight. But we had nice price spread out here. We rejected the $64 level, closed out at $65.93, and $65.71 is your benchmark. And what that benchmark is this. Well, gold market has been coming down since April 4th. We came down hard on the 15th of August. That's when the XAU went from $69 to $65.71. We've been building sideways from them. Bottom line, we're inside that. That's saying that the probability goes higher. We're going to go for the top of this range. The thing that's pretty wild about the XAU, the HUI, is that this is like a classic head and shoulders bottom. And what it actually did out here today, it's symmetrical. It has everything, and we'll find out whether it is or not. Well, it would have to do, you know, you get the left shoulder, as you're looking at it, you get the left shoulder made, you get a beautiful head, you get the right shoulder made. The real question is going to be, is it going to have the juice to get up and over this $68 area? That's the same area that would coordinate with 12.18 to 12.20 inside of the actual metal. Each and every time that we've been up to that level, bottom line, sellers are in the market. They're firing away. And in fact, the net shots inside the futures market right now, extensive. Gold Bugs Index. Gold Bugs Index is traded up 40 cents out here today. Wide price spread. We had a low out here of $139.63. It closed at $143.84. It just had to get back inside the $142.30. Same type of setup. It looks like they're both going to be going for this swing points that we haven't been able to make them through. You've been building good cause. Now, that being said, what you do have inside the gold market, and this we haven't had something like this for quite some time, is you get a couple ABC structures on the way up, confirmed ABC structures. One of them is an Eco Eagle that had taken the B point out, taken it out with volume on the 2nd of October. Bottom line, a rejected lower price today. Almost put it into a complex ABC structure up, but that's one ABC structure on the way up. If we go take a look at Royal Gold, what you have with Royal. Now, Royal's not an ABC. No, it's a Franco-Nevada, FNV. It's Franco-Nevada. Yeah, it's Franco-Nevada. Okay, so Franco-Nevada, this is going to be cool watching this shakeout. So Franco-Nevada also confirmed ABC structure on the way up. The A point on this is $58. Your B is up there at 65, so you're approximately 7 points. Your C is the low of the 26th, which you're talking about $68. And this also is going to end up being a complex ABC up. The reason being, it took out the B point on the 2nd of October. That's when it went from $63 to $65.52. Today you pull back. You had light volume in the pullback. Didn't get under the B point, being getting under the C point, which is 61.15. We got the 61.69. Rejected it. It's going to go for it again. Those two equities. Oh, and then Harmony. Harmony was actually the first one off. Harmony was the first one to give us any clue that this baby may be going to higher price. And Harmony was the first one to reject lower price at 142. Got some juice underneath it. Went up 6 cents today. Not bad today. Bottom line is that what I expect we're going to see out here is that you'll see some follow through in the other equities, because this is the first time we've had ABC structures on the way up in months. Big time. Stay right there, folks. Come right back. We have the Dow finished up 39, NASDAQ down 52, S&P's off 1. Don't forget, folks, I'm Mr. Steve Rhodes. He's going to be doing an outstanding workshop for you. The way you get this is come over to our website at TFNN. Check out Steve's newsletter. Comes with a 30-day money-back guarantee. Workshop is going to be tomorrow night, 5 p.m. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same page with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finish up 39, NASDAQ down 52, S&P's off 1.5. You just joined us. The Dow just shook off about a 250-point loss, folks. Ended up 39 up. We were down at 26,223. Ended up closing out at 26,486. That being said, if you go over to the SPY, bottom line, you get a sideways movement in the SPY. No traction there. NDX 100, good comeback in both of those indices, but bottom line, still lower lows. Now, overseas, folks, monster action last night in Asia. You had China that was closed for, I believe, all last week. China opened down 4.5%. Shanghai was off 3.7%. You had the Nikkei down 0.8%. What you had inside the Nikkei was the yen is getting stronger once again, and that just took the Nikkei south and took it south pretty quickly. We go over to Europe. We take a look at Europe. Europe today was off about 1% to 1.1% right across the board. Let's go take a look at the DAX first. DAX was down 1.3%. You're trading 11,947. And what's going to be the danger point here is this. So your DAX in Germany, last 5 months, we just have gone from a price point of 13,100 to, let's just call it 12,000. We'll round it up. Bottom line, quite a hit. That being said, what's happening now is that you're barreling after this lower swing point of 11,800. If we pull this back, what you're going to see is that this is the bottom of the consolidation. Now, this consolidation has been on since March of 2017. So you're talking about a market that hasn't gone anywhere in quite some time. And now what we have is that it's going after the lows of this consolidation. If we break it, then you are going to see, let's pull this back. Okay, so, yeah, you're already inside the, actually, you know what's interesting, man? You're already inside the lower trading range. As soon as we come back inside 12,200, that gets you in the lower trading range, and that does put game on the market down into this 9,338. It's a big number. Let's go take a look at the FTSE, and let's see how that's trading out in the UK. So the FTSE 100 was down 1.1% today. Ooh, baby. This really has some velocity on the way down. Okay, so this is off a high of 7,800. You're at 72. We put this back. Okay, so this is not in the lower trading range yet, but that being said, it looks to me like you get a high swing point that's laying out here. 72. Oh, yeah, this is game to 68 now. It's game to 68, which would get it back inside the lower range. What we've done is this. Well, we have to get a little bit lower, actually. We dug into this bar by 20 points. It'd have to get into lower price, but that's game also. And so that's the UK. That is the DAX. Italy, you've been hearing a lot about Italy. Bottom line, Italy's got big problems. Market-wise, all of the above. Don't have a problem if you want a great vacation, go to Italy. It's insane. It's gorgeous. That being said, what we just did out here is that it looks like we got a big ABC down. So Italy's off a high of 24,500. Yeah, that's down 500 bucks. It's pretty intense. 5 months. That being said, you're back to where we were in March of 2017. This broke the consolidation, though. Oh, look at this. This is a monster ABC down. Yeah. You get 24,500. Yeah. You almost get 4,000 point ABC down. Let me see this again. 24,500. So you get 4,200 A to B, which will bring you down to 17,000, about 18,000, 17 to 18,000. I could, just doing this in my head right now. That's a big number, man. Italy's going to, you get a swing point laying down here at 18,820. That's where it looks like it's going to go. So we're going to be hearing a lot more about Europe in general, folks, because that market wants lower prices, and it looks like it wants them in a big way. We get over and we take a look at the king dogs out here. Shopping-wise, okay, bottom line, holidays are coming up. Everyone's going to be looking at the big, large Amazons of the world, Nostrums of the world, Walmarts of the world. See who's going to be able to basically pull it the most amount of bread down. If we go over to Walmart first, and we take a look at Walmart. Walmart's, you know, not bad. Off its highs 109. You trade 94. Has some strength though. This is like almost like a high-end consolidation. Apple, I think, you know, Apple's still going to be one of the winners out here inside the whole shopping area. You know, Apple's just, it just doesn't want to back off its highs. And, you know, what you have out here is that we've been up at these highs now for 7 weeks. And it doesn't look to me that it wants to back off. Now, this is what you're going to be able to see out here. Let me just look at this for a second. So Apple hit a low of 220 today, closed at 223, had a high of 225. You can see that even when they were throwing all the NDX stocks out the window this morning, they drove Apple down, but not like they drove down some of the other NDX 100 stocks. So let's see what they did to NVIDIA on that downdraft. So NVIDIA, down $4. It had been down 9. Okay. NVIDIA's trading 265. And you're in the lower range again. That's set up, this is high volatility, but that sets up 238. Lam Research, LRCX. Lam was one of the leaders on the way down. Ooh, still a leader. Holy cow, look at this. So you 5 months, you're down from 220 to 146. This is going to be quite a peak, man. See, because Lam went up so quick, there's nothing holding us on the way down. Lam was $63 October 2015 to $234 March of this year. Then gave it up in spades, has volume on the way down. It's a little problem in paradise. AMAT, let's go take a look at AMAT. AMAT out here, yeah, same deal. Wow. So $59 to $36. This chip business is looking rough. Oh, bad. That chart looks exactly like Lam Research. Now, what they would have it, there's nothing to hold this up because we went up so quick. AMAT went from $14 in October of 2015 all the way up to 62 without breathing. That's great, but guess what? When you're pulling back down, there's nothing there. There's no floors to support you. Dow finished up 39, Nasdaq down 52, S&P's flat. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Blackbaud. This is a company that provides software and related services specifically for non-profit organizations. The low for the year is 87, the high is 120. Now, this closed at $90, down 352. This is getting hammered. It's down at $77. That's quite a hit. Let's pull this back. This is, it's going to be a monster ABC down. Broke a B point already. Has volume on the break. 77. We were at a 120 4 weeks ago. 77 bucks. Let's see what they have to say out here. So what happened here? So number-wise, they saw it 780 million to 890. They came in with 844. That doesn't fly. That's for sure. They're cutting their fiscal 2018 view down about, they had seen 275, now they're seeing 246. They claim that it's a one-time service revenue reduction. Bottom line is that the market is saying, no, I don't think that's going to be a one-time deal, particularly because this has been fast and furious. 2 months ago, you're at 120. Now you're trading out at 77. Yeah, big number on the way down. And if you take a look at this, what you can see is that you did break. This was an ABC down. You broke the B point, broke it with volume. Your A point on this is 120. Your B was down there at 94. So you get 26 bucks. Your C was, oh man, unreal, 105. So there's your 170. There's 170 right now, and right now, I believe it's trading at 177. It's trading at 77. So bottom line is that 70 bucks is coming at you. That's if it's a one-to-one ABC structure on the way down. What I expect you're going to see out here tonight, folks, is you're going to see a little more pain in the Asian markets, particularly Japan. Japan, that yen is, bottom line, getting stronger. We just went from the 114.50 to 113.23. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking there right back here. 8:30 tomorrow morning. I'm Mr. Jason Path. He'll kick you off. Morning Market Kickoff. Outstanding show. Wow! Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.